Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. As always, guys, the rats are leaving the ship. We're going to tell you exactly what's going on in these markets. Stay tuned.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
Hey, Bob, I don't know how much more data you can pull up to just show that there's going to be someone left holding the bag in these markets, and it sure as heck isn't going to be the institutional players.
No, as we talked about over the weekend, is that they're already positioned out.
Right.
And now what's really scary is, Phil, between now, really we're talking mid-April to the end of January, and we'll get to that chart in a second, is seasonally very, very weak for liquidity. And couple that with the leading indicators, remember they're talking about, are we going to be in a recession, not in a recession? I think we can disabuse people of the notion that we're not. We have 12 months in a row now where the leading indicators have been in, recession type of territory. And now you're starting to see the fruit of that with more and more layoffs being announced. Whole Foods just announced a series of layoffs, and it's just going to be going on and on and on and on and on. And what's interesting about that is, with layoffs comes people's contributions from 401ks end. And, so people aren't, if they're losing their jobs, they're not going to be saying, hey, let me just flip this into an IRA and keep contributing. People kind of go to ground here a little bit. And the 401k is on a chart maybe we could show tomorrow. What was really, really leveling off and is tied to layoffs.
Yep.
So it's going to be a problem. So the leading indicators aren't getting any better anytime soon. But here's the one I want to blow you away. Remember, banks are saved, everything's good. Well, check this chart out. I mean, this is bombs away, and it's not getting any better. And in fact, I just put another $25,000 into 90-day T-bills. I mean, you're an idiot not to. You get a better deal than almost any dividend-paying company out there that's profitable, that doesn't have to overpay for dividends. And why would you keep your money? And there's $1,000 the minimum, Phil. It's not like you have to be like, Johnny Pockets to do this. So This is getting worse. And look at this chart. This is one that blew me away. This whole reason why I wanted to talk about this stuff today. This is a seasonal chart for deposits coming into the banks. If all things being equal, this is how money flows into and out of the banks in terms of cash flow. And apparently first Q1, and that's probably the reason why Q1 is always pretty strong for the markets. A lot of money moves into the banks. And then when they pay their taxes at the end of the April into start of the second quarter, you get a collapse in deposits. So we reach peak bank deposits at the same time people are bailing out of the banks. And I think what's going to happen is we're going to see some more either extraordinary efforts or we're going to see more banks go under, Phil.
I agree. And the banks and the smarter money is leaving the market, whether you want to believe that or not. And I know the markets have been doing a good job of staying up, but the fact of the matter is they're starting to exit stage left. And one thing you can look at, we've shown you guys a number of recessionary metrics. Here's another one where the money market funds, as the funds start rising, balances in the money market funds start rising, it's recessionary. And you can see that in the last two, call 2020 a very brief recession, but still you had a big ramp in that. And we're ramping back up too now. The scale of it's a little skewed, but if you were to zoom in, we've got quite a bit of flows now going into the money market funds. And that's not the only thing too. If we look over at what the banks are positioning for as far as their short-term cash management and what's going on with the banks in far as the overnight repo goes, you'll see the overnight repo is climbing. Now, there's a little spike there at the beginning of 2023, which is typical for year-end adjustments. But what's interesting is that those year-end adjustments usually are foretelling, like whatever that spike spike is, because we had a similar spike in 2022 and we ended up going back to that level.
Right.
So if you look, or I should say, as we got into 2022, we had a spike which was right here, that spike there. And then we ended up getting back to it later in the year and exceeding it. So similar thing here, I do expect repos to continue to climb. And again, as the banks park money in reverse repo, it's less liquidity for the markets. And it goes back to that liquidity chart that we've been showing you guys off and on. Ultimately, this going up is bearish market. So you've also got Yellen too on the cusp of going to be driving hers much higher as we get to this debt ceiling debate too. So again, just a reminder that the second half of this year is going to have some serious headwinds, and I think you're starting to see the clues here as far as where the money is going, the smart money, and it's not going into stocks, it's not going into the meme stocks, it's going to flights of safety, and that's going to be the easy money, which is the Fed basically saying park it with us, park it in a money market fund, park it in treasuries, T-bills, you're going to get easy 4 or 5%, or you can risk it in the stock market that really is seeing all of the flows leaving the stock market and then going into these safe haven assets.
Yeah, Phil, Bed Bath & Beyond is filing for bankruptcy, and bankruptcies across the board are starting to lift with, credit collapsing. And they say every time bank profitability falls, credit contraction falls by 5x. So, this is like the worst possible time for a singularity. People losing their jobs at the same time, the ability to take advantage of the stock market is going to go away. It's going to be, I'm going to lose my job and then I'm going to lose my wealth that I have in the stock market. And that's going to create basically a feedback loop that's very deflationary and, dare I say, depressionary, in terms of, a recession is short term, a depression is a long term thing. And I think this is going to extend out. There's nothing on the horizon that's going to allow this market just to snap right back.
I agree. There's a lot of problems ahead. So we got earnings tomorrow, Bob, that kick off with pre-market, post-market earnings, and then Wednesday and Thursday. So I think we're going to have a pivotal week this week as far as what direction we take going into the FOMC announcement, which we'll do live again. I think that's May 3rd, the Wednesday on the first week of May. And I think we're going to have a directional move into that. Whether it's up or down, I think is dependent on how the market reacts to the season or the earnings this week that we have coming up.
Yeah, I would just think I'm still in the slow burn camp, Phil, where this is going to be 6 quarters of herky-jerky disappointment as we just keep sliding down the grease pole.
Yep, agreed. All right, guys, let us know your thoughts on all that. We really appreciate you guys watching. Please hit like and subscribe. Please smash that notification bell too if you can and set it to all. That really does help us out. And we'll see you on the next video. Take care.
Thanks.
Trade Genius.